Hello traders, Nathan here. Order flow ratios. I believe this is a very important concept that many of us are probably not able to incorporate it in our trading. But as long as you have the footprint charts, of course, I'm talking to the order flow traders here. Um, Order flow ratios. So this morning I had a nice pattern that I actually saw happening prior to actually post London Open, which was uh, you know about an hour and a half past London Open. And of course, when the market makes the London break, of course everybody is very much excited, and we have a lot of retail traders trying to chase the moves and all that kind of stuff. So what did I see here, guys? I want to speak about the order flow ratios. It's something that some of us, or most of you guys, will not probably understand, but the calculations here are purely very simple. We take the upper figure, divide by the lower figure on an up bar, and we take on a down bar, and we take the lower figure 5 standard lots trading on the bid, and we divide that by 1 contract trading in the next cluster, and we get the ratio bound low. Right, so it's very important for us to get the difference between those two, and for us to differentiate between if the bar is an up bar for a bullish candle, or if the bar is a down bar for a bearish candle. Very important to also understand the single print concepts, where we say that exhaustion appears when we have small contracts trading on the extreme end of the bars. So we can see as the market bounced off VWAP right here, we see a 6 standard lots trading on the bid, on the offer, sorry, and then 1 standard lot, single print. We have a big 100 standard lots trading on the bid as well, which you can always substantiate here and get the ratio, and also determine that based on the ratio bound, the high limit and the low limit. So if you do, for example, if I can do that math there, for 100 standard lots divided by 87, then we have 1.14. No, we're not interested in that top heavy. It's not a top heavy setup, neither is it a ratio bound high. So it's very important for us to differentiate that. So when you see standard lots, heavy standard lots on the bid and the offer, you have to be very careful before you actually determine. You have to know the thresholds or the parameters required. And we're saying for the move up, of course, we are looking at figures to do with 30 standard lots, and you divide that by the threshold of about 70% for ratio bound lows, which represents 0.7 percent. 0.7, since it's a ratio, it's not a percentage here. So having said that, just to keep it simple, I don't want to overcomplicate this and turn this into a class. We get single print right at the top of the candle. We get a single print. And by the way, when I talk about single print, I'm talking about ratios, standard lots that range from from 1 standard lot to 9 standard lots. That will actually be termed as a single print. So we see 6 units, 1 unit, 5 units, 1 unit, 8 units, and all we're saying, guys, is the only SI unit of volume traded in the market is a standard lot. So we can only talk of lots. We cannot talk of mangoes or tomatoes. We talk about mangoes when you go to the marketplace. But when you are trading financial instruments, or any financial instrument, talk about lot sizes. So what you see here are 5 standard lots, 1 standard lot, 8 standard lots. And what this shows us, guys, is exhaustion. Very important concept in as far as volume spread analysis is concerned. Wyckoff speaks about demand and supply. The market moves because of the laws of demand and supply. If you think the market moves based on anything else, then you have to justify yourself. But I think just like any financial instrument or any commodity out there, when demand outweighs supply, we expect prices to move up. When supply outweighs demand, we expect prices to just plummet or fall down. So we get exhaustion, and when you see this, this single prints right at the top here, what came into my mind was, this move up, or this bounce of VWAP is short-lived, and I started rallying and preparing my shots, and obviously you can see this type of bars are very cynical. Why? Because they try to induce many traders and many algo systems. I'll show you this candle on MT4, and I want you to tell me what you think. All right, this is the bar that we're talking about right here. We have nice, if I can put it as a
incoming mail.
sorry, if I can put it as a bar chart, you get to see this bar that looks like a I can just tile this side by side so that you guys can be able to see clearly. So this is the bar that we're talking about with a single print of A star and lot at the top, and then we have the bar just right here that looks like a hammer. And many traders that trade candlestick patterns will be like, oh nice, you know, we're gonna go long, and you know, and at the end of the day, you know, get smashed. Why? Because at the end of the day, it looks like a nice you know, candlestick pattern move over a long, but you can get to see that it's actually getting exhausted right here at the top, and then we have another exhaustion, 3 standard loss trading on the next bar, which was a tiny candle. And then what do you see? Next move, boom, VWAP is no longer VWAP resist support, and now becomes VWAP resistance, and at the end of the day the move drops all the way, 2 legs, 20 pips, 25 pips, good for you know, the day's trade. And I'm happy, gives us a, you know, an unfinished business, or what we call an unfinished auction right around this top, and I'm very happy to, you know, bail out at the next doji right here because of what we call a, you know, single print at the bottom, which shows exhaustion in terms of the selling exhaustion. So ladies and gentlemen, what I'm trying to say here is this: how do you combine ratios? So you can equally see that we have a ratio imbalance right here. However, this bar is not bullish but bearish, so this order flow ratio is not valid. In this case, we are saying 3 standard lots divide by 32, and what do we have? 0.09 units, which is actually below our threshold of 0.7. Okay, so what that means is that the only other parameter that is missing, or what is missing out in this particular candlestick, just to ensure that the ratio is valid, is that this particular candle was actually bearish. I would have loved if it turned bullish. I would actually go long here, but we have something that we call a professional buying setup right here, where you see the volume point of control dominated by the bulls, 205 standard loss trading on the offer, which is actually a very, very significant hint that actually we are bottoming out. Combine that with a single print, 3 lots at the bottom, and you know what? Bingo, you're in. You know, you just a matter of time before the market actually, you know, makes it move. But you can see the market just pops up, and you remember, guys, what we said about what the unfinished auctions are all about. Unfinished business has to get completed, and actually it happens right a few minutes later, 25 minutes later, the market comes back and completes this auction right here. You can see 16 units trading at the bid, on the offer, sorry, and then the market completes the auction, and that's exactly what we want. The dealers didn't have enough time to actually get what they want, so what do they do? They dump it some more, you know, and this is where we are saying the unfinished auction is right here, gets completed right here, and then the dealers, you know, just want to go for stops and take out every single trade out there. So what do you see? They dump it some more. They take out this swing low right here with a nice pin bar right here, or what you call a long wick, and then what happens? Everybody panics, induce some shorts. You know, the euro is messed up, nobody wants to trade it, everybody's panicking, and what happens? Retail traders will love to short, especially at the lows, and that's exactly what we talk about as far as psychology of trading is concerned. You have to think and act like smart money. You may not have the tools, but most definitely, if you have the desire to learn all these things, then you begin to see things differently, and you have confidence in your ability. So that is the swing right there, and then they get out, they get the stocks right here. Of course, these are the futures contracts, this is spot FX, so you see the nice little tail right here that pierces through the swing low, or what we can call the low of the day. And what happens? Induce people to short. You can see 231 lots went short. Who is that? That is the retail traders chasing the moves. The trend is your friend, but until the trend ends, then you know that the trend is not your friend anymore. But I'm not encouraging people to try and pick bottoms anyhow without having appropriate tools to do that. So you really have to be very careful as a day trader. Trade what you see and not what you think. So when the market takes out this low, everybody, you can see this nice congestion right here, which was actually single prints all over again, right at the bottom of the bars, telling us that the selling is getting exhausted. Okay, awesome. So when we see that as order flow traders, we trade what we see. Basically, we start accumulating our longs, and that's exactly what I did. You can see a nice strike long right there, and then added a few more, I encourage you to always keep your money management in sync with your risk appetite. Do not try to trade how you see me trade. Trade your own, your own style and in your own fashion, but keep in check. Risk management is very important. So we get a move up after the exhaustion, and that's where we are at the moment. And if you look at the market, pops up single print, yet again a little bit of momentum right here, and then you can see the bar closes bullish. Very nice confirmation right here from this push, second leg right here, and you can see the market just pops up, and then you can take profit at VWAP. You can choose to trade intra-bar analysis, bar-to-bar analysis. Sorry, not intra, I'll take that again, not intra-bar, but you can choose to do bar-to-bar analysis, of which is exactly what I do myself. I try to look at every bar and analyze it in terms of what is it saying in the context of the market. So I look at this bar, look at this bar, I look at this bar, and then I need to see some kind of exhaustion or no more demand. When you talk about exhaustion at the top of the bar, single print, then we are talking about that in the context of demand getting finished or demand getting exhausted. That's why we're saying exhaustion. Okay, it can happen both sides, at the top of the bar, the bottom of the bar. Doesn't make sense, doesn't make any difference. You have to interpret it in the context of what you see, guys. Ladies and gentlemen, this is order flow ratios for you, and I hope that somebody is learning something from this short video. And I want to keep it straight up, 12 minutes on the dot. And if you have any questions, if you're former students of mine, please contact me via Telegram. I will be very happy to take you through each and every concept in here. So I will speak to you guys very soon. Let's watch what it does in coming days, in coming hours. See if it takes out the VWAP right here, notorious resistance. If it does, then we will be very happy to profit all the way back up and complete the journey for today. Okay, so I will speak to you guys very soon. Stay happy, be positive, watch and learn, and always stay hungry. Okay, cheers. I will speak to you guys very soon. Goodbye.